Hello traders, it has been a while. So today I'm going to be showing you just one candlestick strategy which you can use to profit in the market. Back tested by myself, and I can tell you that this one candlestick strategy, if you learn it very well and apply it in your own trading, it can be very profitable. It can increase your win rate. So watch this video till the end, give it a like. And also, if you haven't subscribed to this channel and you are getting value from my content, which is free on here, please subscribe. Thank you very much. I'm going to be showing you 4 candlesticks, all right, and the strategy that you can use to trade those candlesticks when they appear on the daily time frame, and you make your entry in a 15 minutes time frame. Whenever you see these candles close, okay, on a daily time frame, you can be confident to go to your 15 minutes time frame the next day to trade in the direction that I will be showing you in this video. So watch the video till the end and see how that goes. And if you are looking for mentorship, my contacts are in the description below, my WhatsApp and my email. You can send me an email for mentorship and let's talk about it. These candlesticks are going down. This is a trending market is going down, but then when it gets to support, at support here, okay, this is our support level. The first candlestick we are going to be looking at is a hammer. I believe you guys have heard of a hammer. So we are going to look at a hammer. All right. So the hammer looks like this. Okay. It looks more like this. It has an smaller upper body with a long wick at the bottom. And when this candlestick happens at support, listen to me, it has to happen at either a support level or at the bounce off of a trend line. Let's say there is a trend line like that, okay? And then the price has broken above the trend line. When the price breaks above the trend line and there is that retest, and then you see this candle, when you see this candle forming around, when you see this kind of candle forming around the retest here, okay, at the bounce off of trend line, when it happens, when this candle also happens around here, then you can apply the same strategy that I'm going to be showing you here. If it happens at a support like here, okay, we see that there's a lot of buying pressure, which is why there's this long wick, because previously the price had tried to push down below support, but the buyers took control and pushed the price back up to this level, and the price closed above here. Okay, that is what the hammer is telling you. So now at support we have that buying pressure, because now you know this has taken a full day to form, and there is buy. You go to your 15 minutes time frame, okay, and the next day you mark out the high of that hammer. You mark it out with a line like that, and then you go to your 15 minutes time frame the next day, and then you look for candlestick confirmations like bullish engulfing candle or 3 white soldiers on your 15 minutes time frame or 5 minutes time frame, and then you place candle, which is a hammer, right? So you place your trade after confirmation on lower time frames, 15 minutes time frame entry, okay? Your entry will be 15 minutes. All right? So your 15 minutes entry would look something like this. So you are now targeting a 1 to 2 risk to reward ratio, 1 to 3 risk to reward ratio on lower time frames after identifying this candlestick, which is the hammer on a daily time frame. Previous day candle is a daily time frame. You mark out with the close of that, or the highest price of the hammer with your line, okay, with your horizontal line, and then buy above that green line the next day on a 15 minutes candle after finding a confirmation candlestick pattern on lower time frames. Guys, I hope you understand.
So also, let me repeat this with our next candle. All right. Our next candle would be a Dragonfly doji. Okay, with a long wick at the bottom, which it represents a rejection. So you can see this candle here. So you can see here, this is a Dragonfly doji. All right. So when it happens at a support and you see a very long wick like this rejecting at support, it means that buyers are very much in control. There's a lot of buying pressure. Okay, that's what that doji represents. We buy above this green line, guys. All right. After confirmation with candlesticks like bullish engulfing candle or 3 white soldiers or something. Okay, but in a 15 minutes time frame, the next day you enter for a buy, because you are looking, this candle the previous day was a Dragonfly doji, and we are looking at, and it indicated aggressive buying pressure. So we are looking to buy, all right, the next day in a 15 minutes time frame, and we target a 1:2 or 1:3 risk to reward ratio. We are buying above that green line, all right, the next day, all right, and we place our stop loss in the 15 minutes time frame just below, or a considerable number of pips, okay, at the areas of value, and target 1:2 or 1:3 risk to reward ratio in the upward direction above the green line. Do not buy until you see candlesticks in 15 minutes in time frame closing above the green line. All right. So that is what you would do. But the candles, you identify them on a daily. This is the hammer is a daily, and the Gravestone, the Dragonfly doji is also a daily candle. But the entry candle the next day the entry time frame the next day should be 15 minutes time frame, guys. Hope you understand. All right. So now let's go to the bullish scenario. In the bullish scenario, when you look at this, okay, let's say this is, as you can see, this is my representation of a bullish market. So now that when the price gets to resistance and you see a candlestick pattern like this one here, when you see this kind of candlestick here, this is called a shooting star. So our next candle of interest, okay, is called a shooting star. Okay, so this is a shooting star. It happens at a resistance level. When it happens at a resistance level, especially at a resistance level, or even at a bounce off at a trend line, okay, I'm going to be showing you that on a real chart. When it bounces off at a trend line, it's the same thing. Trend line or at resistance, it's the same thing, guys. All right. So let's say this is a trend line. Okay, let's say even in a downtrend, you have a trend line like this, and then you see a candle like this one, which is a shooting star. Okay, and the market is dropping in this fashion. All right. And then there is this shooting star candlestick pattern. Okay, you just wait for the next day. All right, you mark out the bottom of that candle, the last price of that the lowest price of that candle, and then you go to the next day. You in the 15 minutes time frame, the next day you consider selling. Okay, you consider selling below this green line. You consider selling below this green line right there. Okay, you consider selling below that green line the next day and target a 1:2 or 1:3 risk to reward ratio to the downside, guys. So this is how this one would work. Okay, on it when you have a trend line and it's a downtrend. So the same scenario would apply. So let's go back to our first example up here. Okay, first illustration. This same candle is here. This is a shooting star. So when you see this shooting star at resistance, okay, this indicates aggressive selling pressure. As you can see, a long wick at the top, sweeping liquidity above resistance, and you can see it closes inside or below the resistance. Once this happens on a daily time frame, all right, this happens on a daily time frame, all right, and now you will go to your 15 minutes time frame, all right, the next day, and you mark out the low. First of all, the lowest price of that daily candle, which is the shooting star, you mark out its lowest price, which is this point here. That's the lowest price. So the next day you go to your 15 minutes time frame and you are looking for confirmations for a sell below that green line, the horizontal line, and you're targeting a 1:2 or 1:3 risk to reward ratio below this green line the next day in the 15 minutes time frame. This entry time is 15 minutes, guys, on the next day. All right. So the next example would be for a Gravestone doji. All right. I'll first start with the illustration for a trend line. So if we have a downtrend like this, okay, and you see a Gravestone doji, okay, forming like this. This is a Gravestone doji. This one here, it has a very long wick at the top and a very tiny body at the bottom. All right, a tiny body at the bottom here. You can see a tiny body at the bottom here. So a Gravestone doji, once this happens, this indicates aggressive selling pressure. If it happens at a trend line like this on the lower down in a downtrend, then you are looking at selling. All right, so you just wait for the Gravestone doji to close, okay, and once it closes, you mark out the lowest price of the Gravestone doji, all right, and then you sell. You go to your 15 minutes time frame the next day, because this is a daily Gravestone doji candle. The next day you go to your 15 minutes time frame, and then you are selling below that horizontal line that you have marked out. You are selling below that horizontal line the next day on the 15 minutes time frame, guys. All right, that's the entry time. So going back here, we are looking at a Gravestone doji right here. Happens at resistance, the same thing as happening at a trend line, like in this case. So you have a Gravestone doji here indicating up a downward pressure, because you can see the long wick at the top means the buyers try to push the price above resistance, but the sellers took control and pushed the price back down aggressively and closed with a small body. All right, so after the close of that Gravestone doji, you mark out the lowest price of that Gravestone doji, like this is the lowest price of that Gravestone doji. And because this is still a daily time frame, now the next day in a 15 minutes time frame, you are looking to sell below this green line, guys. All right, you are looking to sell below there in the 15 minutes time frame the next day. So you are looking for sell opportunities below that green line, horizontal line, which you have marked out. All right, and you're looking for 1:2 or 1:3 risk to reward ratio the next day in the 15 minutes time frame. So this is how this strategy works. I have back tested it, and it has worked for me. Okay, it has really worked, especially on those specific time frames that I have shown you here on the screen. First, a daily time frame. You identify the hammer or the Dragonfly doji or the shooting star or the Gravestone doji. Once you identify those on a daily time frame at areas of value, support, resistance, trend lines, all right, once you identify those, then you go to your 15 minutes time frame the next day. Okay, and place your trades above the horizontal line that you have marked above the hammer and you have marked above the Dragonfly doji. Do not place your trades until you see confirmations in 15 minutes time frames the next day above the hammer and above the Dragonfly doji highest prices. All right. Okay. So now that is how you would trade this. So you would trade this like that. And also for the shooting star, you would wait for the next day. All right. You would wait for the next day to sell below. You'd wait for the next day to sell below the Gravestone doji and to sell below the shooting star in 15 minutes time frame. This is, and there is more. This is also an example. This is USD JPY, a daily time frame, and I'm going to be showing you the Dragonfly and the hammer at support. So you can see here, focus here. This is a hammer candlestick pattern. You can see that small red candle right there. That is a hammer. So when you see that at support, as you can see, this is a support area. This is a support area previously touched there, then we returned and we can see this reaction. So let's focus on what's happening here. So that when we see that hammer pattern, okay, and we are going to look at, this is on a daily time frame, but you go down to once that candlestick closes, okay, that hammer closes, or in a daily time frame, we wait for that candle to close, okay, and as in previous examples, you would just mark out the high, okay, in this case the high of that hammer candlestick. All right, and then you go to your 15 minutes time frame and you can place your buy orders. Okay, in your 15 minutes time frame, you can look for candlestick confirmations to place your buy orders, because this is a major support area. We're anticipating buys, and so when we see this sweep here with this long wick at the bottom with the hammer, and it closes inside or above the support, we are looking to buy them, to buy. All right, so because we are looking to buy, we will place our stop loss just below support there, okay, and look for our candlestick patterns in a 15 minutes time frame and enter this market, and we'll look for 1 to 2 risk to reward ratio 1 to 3 in lower time frames like 15 minutes. In a 15 minutes time frame, this would be so many pips. All right, you would make quite a substantial amount of money targeting 1 to 2, 1 to 3 risk to reward ratio. I'm not saying you enter in on a daily time frame. I'm saying after identifying this candlestick pattern, this is the hammer. All right, you go down to you mark out its high. All right, like we have marked out with this green line, and then you go to your lower time frame, which is 15 minutes, and place your buy orders. Okay, after confirmation candlesticks. All right, always wait for a confirmation and place your buy orders once the price crosses above this green line at lower time frames. Once the price breaks, closes above, okay, once the price breaks above this green line and lower time frames, that's when you buy with the confirmation candles like bullish engulfing at lower time frames, that is 15 minutes time frames, or you wait for your 3 white soldiers or some kind of candlestick patterns at lower time frames, and you're entering for your buys here in a 15 minutes time frame. But identifying the candlestick itself, you identify on a higher time frame. This is a daily time frame. All right, so yeah, that's how you do it. So that is a hammer candlestick pattern. And the next one we see here, okay, just close by there, is this. On the third day, we can see what is that candlestick pattern. This one here in particular, this one here, the red one. This is a dragonfly, guys. That is a dragonfly. All right, so that dragonfly is also an indecision candlestick, but it shows that there is an impending reversal. in most cases. Okay, so we can see a long wick reaction at the support here, indicating that there's a lot of bullish momentum, guys. Okay, so we are looking to buy after the close of that of this Dragonfly. We are going to look to mark out the highest price of the Dragonfly right there. We mark it out there, and we go to our lower time frame, which is the 15 minutes time frame, and we are looking to buy above this green line. All right, once the price crosses above the green line, we are looking to buy, and we place our stop loss below that, a considerable number of pips below this green line. Okay, and as you can see, the price as you can see, the price continued to rally today. And as you can see, the price continued on the second day to rally, okay, to the upside. So if you had placed your stop loss in lower time frames, okay, on a 50, you got your 15 minutes time frame, and you look for your confirmations for a buy and target 1 to 2 or 1 to 3 risk to reward ratio. Still, even when the price retraced back to this point, okay, still at this point here on your 15 minutes time frame, still you'd have made lots of money and still waited for this price to even come to this level, and then still continue upward. Okay, you'd still wait for that and then continue holding that trade for such a long time. You can see how the price went even higher after this slight retreat. We can also see that this is a downtrend on a daily time frame for AUD USD. It's very much bearish, guys, very much bearish. And so when this happens right here, I just want to make sure this is a clear downtrend. All right, so with our trend line there, we can actually see now our trend line will act as a acting as a resistance here on this in this downtrend. And as we can see here, we already see a Gravestone doji here. This Gravestone doji, this candle here, we are going to mark out its low with our green candle, with our green line. Okay, that's the low of the doji. Okay, and after marking why are we marking out the low? So that we can identify on a very lower time frame where the lowest price of that doji is, so that we can place our sales, because already we know that the trend is very much bearish. So we are going to look at selling on lower time frames. Okay, so this is a daily doji. It indicates very much down pressure, okay, downward pressure or selling pressure, or down. It indicates a very much selling pressure. All right, as you can see, the long wick reacted to at the trend line, showing us there is still much selling pressure. So this is exactly what you do at the trend line, because the trend line is like is acting as a resistance. So now you go to your 15 minutes time frame, and you are looking for your entries. Okay, at your green line, you are going to focus on the green line. All right, here is where place our stop loss just above there. Okay, and target a 1 to 2, 1 to 3 risk to reward ratio, like that. Okay, and you can see this continue to drop even further down. Okay, continue to drop even further down. You can see this is a 1 to 2, close to 1 to 3. This is a 1 to 3 risk to reward ratio all the way down. Okay, so and it is still dropping. Also, still on AUD USD, you can actually see that there is also an inverted hammer here. An inverted hammer, we call it a shooting star. I know I've already given this example, but this one is too sweet to ignore. You can see this inverted hammer, which is a shooting star, and the moment it touches that trend line, there is that reaction with a long wick, and a small body at the bottom. That is a shooting star. So we mark out our line at the lowest price of that shooting star right there. That is our green line. Okay, and then we go to our lower time frames, 15 minutes time frame. All right, and we're looking to enter. Okay, and we are looking to enter. This would be the next day. I believe this would be the next day candle. So the next day we are jumping in for a sell just below here. Okay, so the next day we will look for us shorting opportunities below this green line. All right, we will place our sell position. All right, we will place our sell position in the 15 minutes time frame. This is what we would do. We will place our sell. We will wait for a kind of retracement after the break below. We'll wait for that retracement to retest this break below the trend line, the break below the green line. All right, the lowest price of the previous day, which was the lowest price of the shooting star. Okay,